Hey folks, have you heard the latest news about the banking world? It's a total meltdown, people. We're talking about 3 major banks collapsing in just few weeks. Yes, you heard it right. First up, we have Silicon Valley Bank, which was shut down due to concerns about its solvency after a $1.8 billion loss on the sale of securities. Then, just 48 hours later, Signature Bank went bust, with depositors getting nervous about its high number of uninsured deposits and exposure to crypto and other tech-focused lending. And the cherry on top, Credit Suisse Bank, which has been struggling for years due to compliance failures and several missteps. I mean, what a mess. So, buckle up and join us to find out what caused these banking giants to crumble. Why Silicon Valley Bank collapse? How it happened? Have you heard the news about Silicon Valley Bank? Well, it's gone bust. Yep, regulators shut it down, citing concerns about its solvency. And you know what that means? Panic in the streets. The whole stock market went into a frenzy, and everyone's freaking out that other banks might be at risk too. Now let me give you the lowdown on this whole debacle. Silicon Valley Bank, established way back in 1983, was once America's 16th largest commercial bank. It was a major player in the tech sector, providing banking services to nearly half of all U.S. venture-backed technology and life science companies. They even had operations in countries all over the world, from Canada to Israel. But like many other banks, Silicon Valley made a fatal mistake. They invested billions into U.S. government bonds when interest rates were super low. Seemed like a safe bet at the time, right? Wrong. The Federal Reserve hiked up interest rates to curb inflation, and suddenly those bonds were worth a lot less. Silicon Valley Bank announced a $1.8 billion loss on the sale of securities. Shares of Silicon Valley Bank fell 60% in response to investor concern about the bank's distressed financial position. Plus, borrowing costs went up, and tech startups had to pay more to repay their debts. This left them with less cash to fund their operations and growth. So depositors in Silicon Valley Bank, a relatively small group made up primarily of venture capital firms and tech startups, began to withdraw their funds from the bank. Founders Fund, a venture capital fund led by Peter Thiel, withdrew all of its deposits. And that's when things really hit the fan. Customers started yanking their deposits from the bank, causing a classic run on the bank. People all over the world started to think the bank was going to collapse, so they rushed to get their money out. March 10, 2023. The rapid withdrawal of funds gained momentum, putting Silicon Valley Bank on the verge of collapse since the bank could not generate enough cash to meet the needs of depositors. March 12, 2023. The Federal Deposit Insurance Corporation, FDIC, which protects the stability of the financial system, took over Silicon Valley Bank in an effort to protect depositors. In response to the outcry and fearing wider spread of the crisis, the FDIC, the Treasury Department, and the Fed took a major step, telling depositors in Silicon Valley Bank and Signature Bank that the FDIC would protect all of their funds, including those that exceed the $250,000 limit. Let's talk to why Signature Bank collapsed. How it happened. Signature Bank was the second bank to fail in this banking crisis, roughly 48 hours after the collapse of Silicon Valley Bank. Signature, based in New York, was a large commercial lender in the tri-state area, but had in recent years gotten into cryptocurrencies as a potential growth business. After Silicon Valley Bank failed, depositors became nervous about Signature Bank's health due to its high number of uninsured deposits, as well as its exposure to crypto and other tech-focused lending. Signature Bank shares fell by nearly 25%, the bank's worst day ever on Wall Street. By the time it was closed by regulators, Signature was the third largest bank failure in U.S. history. New York Community Bank has agreed to buy a significant chunk of the failed Signature Bank in a $2.7 billion deal, the Federal Deposit Insurance Corps said late Sunday. The 40 branches of Signature Bank will become Flagstar Bank starting Monday. Flagstar is one of New York Community Bank's subsidiaries. The deal will include the purchase of $38.4 billion in Signature Bank's assets, a little more than a third of Signature's total when the bank failed a week ago. The FDIC said $60 billion in Signature Bank's loans will remain in receivership and are expected to be sold off in time. Let's explore the collapse of Credit Suisse Bank. How it happened. Credit Suisse has been struggling for years. The company has been plagued by a series of missteps and compliance failures in recent years that cost it billions and led to several overhauls of top management. And over the past decade, the Swiss Bank has been hit with fines and penalties related to tax evasion, misplaced bets, and other issues. In 2014, Credit Suisse pleaded guilty to federal charges that it illegally allowed some U.S. clients to evade their taxes. The bank paid a total of $2.6 billion to the federal government and New York financial regulators as part of the settlement. The bank's reputation was damaged by an accounting scandal at Luckin Coffee. March 2021, the collapse of the U.S. hedge fund Archegos Capital cost Credit Suisse $5.5 billion and damaged the bank. An independent external investigation later found that Credit Suisse allowed Archegos Capital to take voracious and potentially catastrophic risks that culminated in the U.S. hedge fund's spectacular collapse. In 2022, Credit Suisse Bank was hit by social media speculation that it was on the brink of collapse, leading customers to withdraw billions of dollars. That has made profitability a near impossibility for the bank, which has been hemorrhaging money for years. And last month, Credit Suisse's stock plunged to record lows after it posted its biggest annual loss since the financial crisis in 2008, and a report surfaced that regulators were reviewing comments the lender's chairman made about the health of its finances. March 19, 2023.
Tonight, Switzerland's two biggest banks announcing a merger as regulators race to restore confidence in the U.S. and global banking system. UBS agreeing to buy its embattled smaller rival Credit Suisse in a $3 billion deal negotiated by the Swiss government.
The bankruptcy of a global systematically important bank would have caused irreparable economic turmoil in Switzerland and throughout the world.
Credit Suisse is now the third major bank to be taken over in just 1 week after the U.S. government took control of Silicon Valley Bank and Signature Bank, part of a massive effort to ease customers' fears.
We should be confident in the banks and with our banks. And besides, we have FDIC.
Hey folks, what can we learn from these collapsed banks? Don't let the news of Silicon Valley Bank, Signature Bank, and Credit Suisse collapse discourage you. It's important to keep in mind that even large, successful institutions can face challenges and unexpected obstacles. What's important is to learn from their mistakes and take steps to prevent similar issues from happening in the future. Silicon Valley Bank made a mistake by investing heavily in U.S. government bonds when interest rates were low, which ultimately led to its downfall. Signature Bank's exposure to cryptocurrencies and high number of uninsured deposits also put it at risk. Meanwhile, Credit Suisse had a series of compliance failures, fines, and penalties that severely damaged its reputation and financial stability. However, there's no need to panic. The FDIC stepped in to protect depositors and ensure stability in the financial system. New York Community Bank acquired a significant chunk of Signature Bank, while UBS Bank agreed to buy Credit Suisse. These moves show that there are always options to recover from financial setbacks and move forward. My advice to you is to stay optimistic and keep pushing forward. Learn from the mistakes of others, take steps to protect your own finances, and continue to pursue your goals and dreams. Remember, setbacks are not the end. They are an opportunity to grow and become stronger. We can learn from their downfall and avoid investing in ventures without careful consideration or taking on too much debt without a solid plan to pay it off. Remember, the key to success is taking calculated risks and making informed decisions. Keep on striving. Thanks for watching. Please subscribe, click the like button, give this video thumbs up.